So the natural question is it going to hold? That is the natural question that everyone is probably asking and probably screaming at the top of their head that this market is absolutely rigged. The bears are both seeing things that they like, and we'll get into kind of why their logic fallacy doesn't really make sense. Then we will also get into what the bulls are thinking and what they need to see in the market to understand, yes, we are going to confirm this, or no, we are absolutely going to go break that 558 line sitting at right here, break that weekly lower low, and subsequently just pile down a lower, break that 548 on the S&P. But I do want to point out one simple, very quick thing for all you all, and thank you so much for tuning in. The 10-year yield is going up. Everyone's saying inflation is going to be higher. That's what the bond market is expecting. I like to throw something, a little monkey wrench, just a tiny one, into the whole thing. When you sell a bond, the yield goes up because you sell said bond to go buy the stock market. Because, well, market's better. Just simple as that, right? The market is doing very, very interesting things. And let's go back to the S&P real quick for all those that have tuned in for the S&P. We'll cover the NASDAQ and the Russell as well. We'll talk about NVIDIA as well, along with some of the mega caps. Brief 10-minute video for you guys. I'm going to keep this brief and short. So let's go through the checklist. You guys would have already seen the close today, and the first question we need to ask, are we going to close above the magical 574 number? That is the 200-day moving average. We closed above it today, so congratulations, we did it, right? We closed actually, so the 200 days at 573.74, but I'm saying 574 just because it's also going to be a continual expansion of the current trend. So if we close above 574, there's a continual expansion of the trend. We're not really at risking that we're going to be stagnant in this. And we blew through everything, right? So every bear is saying, oh, it's not going to hold. Guys, this was the dominant downtrend that we did not break. We broke it on the IWM and the NASDAQ. The NASDAQ was kind of first because the NASDAQ just sent it down low. But the S&P not only gapped a lot, held the gap, and then subsequently just kept on going, broke to the 200 like it was nothing. If we're able to do this, what's stopping us from doing the 50 this week, right? We got plenty of catalysts, right? This jump was just on tariff easement, not going away, easement, right? All this fear that was pent up here vanished like a whiff, right? We're talking about the fear and greed index 28. So let's put it into perspective. We're not back in neutral, so therefore we do not need to be necessarily fearful of downwards pressure. But we also have to look at this from a realistic perspective. We're still in extreme fear in market momentum. We're extreme fear in price strength, extreme fear in market breadth. We're extreme fear in put to call ratio, which is very coincidental how that's just trimming down lower. Neutral on VIX and extreme for safe haven demand, right? People are not really they're buying safe havens because they're panicky. But we're in extreme greed for junk bond. And this is where I was kind of pointing out this entire rally down, that this market, something doesn't just feel right, right? Why are net speculators at 68,000, right? If smart money was basically getting out, right, like the bears are saying, then why are we naturally long? Why is the Fed CME tool expecting 3 to 4 rate cuts this year, high probability of 2, 3, and then it was kind of like bouncing around with a 4 at a stretch, even though Bostic came out yesterday and basically was like, yeah, I only see 1 rate cut. That's a hawk. Like, did you magically expect the hawk to come out and say, yeah, 5 rate cuts this year, guys? Like, come on. You use the old noggin up there. But let's talk about the data that came out and exactly what happened. We got Barr speaking as well. Not really much, right? Supervision. S&P Global Services PMI. Services is one of those like sectors that's actually growing. Manufacturing, again, still in contractory territory, kind of bouncing around with that. We also going to get housing data, housing price index, right? And also, I want to point out with the housing prices, the same people that are saying the market's going to crash, the catalyst of all this. Number one, you've been saying the same thing about houses, and houses are following the same seasonality. If we see January to February, we see January to February. Oh, 2024 all over again. What happened subsequently? Further price appreciation, new high in home prices. We will get the March number today, so you guys will see. Is it higher than the February? Because then guess what? You're not getting a housing crash because home prices are not falling. They're going up. if they magically do a different number, because they will also say in the same breath that the market is rigged, that it has to go down, all the data is coming out. The same people that rigged it, that put out the data, are magically going to unrig it now? Like, they got trillions invested. You think they're just going to be like, oh yeah, we're just going to go lose half our portfolio? Again, I can't help this logic. Going back to the markets, we're going to get housing data. We're also going to get consumer confidence. This is going to be a tricky one because Powell did mention that he's a little worried about consumer confidence, about how if it drags on for an extended period of time that the Fed may have to act on it, that it may affect spending. As Tom Harkin basically said in the 2010, 2011 Fed, where he basically said, talked about the lags, and I think Powell actually quotes him several times in several of the FOMC meetings. So therefore, Powell has learned a little bit from various different Fed members that have been like an anchor point. Again, read the book Lords of Easy Money. It's a fantastic book, talks about the creation of the Fed. Some of the historical members talks about Greenspan explicitly in there, and that's a spicy, tenuous chapter, as I would say. We also got Williams speaking after market close today. So subsequently, Wednesday is where he really gets into the honeypot, let's say. And we're going to skip all this stuff, and we're going to talk about this Atlanta Fed GDP number right now. They've been slowly revising this thing back up, right? We've been slowly revising we went from 2.8 to 2.4 to 2.1 to 1.8. We get 2 revisions this week. Are we magically going to go back to zero, avoid a recession, all the recessionary fears magically go away after all the market makers bought up all your shares at the bottom, ran it up 2% in one single day? I'm just saying, what's going to happen? Why would market makers be incentivized to actually sell off the market, especially when the put to call ratio is absolutely nowhere near them selling calls, right? So follow the money. And again, I'm being a little flippant about this, guys, just because every bear has said that the end is coming, that they're manipulating the data, but now all the data is going to get ousted, and these people that have manipulated the data are magically going to let the stock market fall as they're long the market. I can't make the data. I can't, right? GDP official coming out on Thursday. That's going to be a spicy one where we kind of get more concrete data. So I think once we get through Wednesday, we kind of see that Atlanta Fed GDP number. Then we're going to kind of continue that movement. If this comes in, let's say, at a higher expansionary point, then that could bolster some growth. But a lot of people are going to be looking at job numbers, and specifically, they're going to be looking for PCE expectations. Right now, 2.5, 2.6 is what it was previously. If it comes in basically flat, again, that would coincide with what the Fed has basically said, where they don't see any progress on PCE the rest of the year. And subsequently, that would also lead to a better PCE number, really shocking the Fed to the point where they may actually give you several more rate cuts than are initially expected in the SEP. Friendly reminder, we do have a meeting in May that is now expected to basically have a 91% chance of no rate hike cuts during that period. However, June has a whopping 59% that we're going to get one rate cut of 25 basis points, and even someone in the 5.2% expecting a 50 basis point cut, with only 35% of traders expected to hold rates during that meeting. And then we would go out to July and basically craters to a further expansionary point. September confirms that you're essentially going to get 2 rate cuts. There's very little people expecting the current rate status to survive past September. That's mainly because the Fed is going to have a tremendous amount of data. So they're basically going to be able to know where inflation is. Again, this is a further out projection. It's not necessarily going to come true. But also, let's quickly recap the NASDAQ, right? Because I did promise you guys we're going to talk about a bunch of companies, and I'm a man of my word. NASDAQ actually wicked down trying to fill some of the gap today, which was very, very interesting, and subsequently ran right back up, hollow candle, expansionary point. So right now on the weekly, we're setting up very, very nicely. Going back to daily here, the next challenge is the 200-day moving average. If we get another push like this today and subsequently close above the 200, that will pretty much seal the deal for where the market is going, and that's going to be straight up to that 50-day moving average. What we do at the 50-day moving average, time will tell depending what that will be. But also we can look at the Russell having a strong move, right? Gap and go, weekly breakout, trying to move through easy price points. And also I want to point out that if we put up the volume that was transacted on the way down, it's not as simple as everyone thinks, right? You're in volume no man's land in the Russell, and you're also going to be in volumes no man's land in the NASDAQ, right? In this latest move, right? We don't really get any resistance until we hit these upper regions here of basically 511 to 522, and there's a magnet of recent price transaction pricing up towards this 522 number. So it's going to pull like a magnet there. And subsequently, we could easily get a very, very crazy, I don't know, additional 4%, 5, 6% week on the NASDAQ. Crazier things have happened to the upside, especially if there's any further continuation of like easing of recessionary fears. People get extremely greedy. Again, I would like to remind you, the market has done several 30% days in a row in 2023 and 2024. Why should this be any different? Kind of form maybe this massive kind of head and shoulders right here, retest the 50, push back up, form a cup and handle. Just a random theory that I'm throwing out there for you guys, but also with the Russell and everything pushing, right? There's no man's land in volume here, 220, right? Russell basically got slaughtered. Again, definitely be looking at buying maybe the Russell in a interesting point right now. I'm not saying go all in, but it's definitely an interesting point. We also have companies like Netflix getting back above its previous gap and go on previous earnings, getting back above the 50, defending it today. Hollow candle, further expansion. Definitely be looking at Netflix as a buying opportunity. Microsoft, weekly breakout, but hollow candle. So it's a little bit of that warning sign. Again, Microsoft is one of those that got really beaten down. So definitely an underdog. Similarly to NVIDIA, came up to that weekly level, rejected off of it, actually making a weekly higher high. So we could be expecting something from NVIDIA here. We could be getting some breakout price action. That's the one to really, really watch. AVGO just mixed stinker right here, while others like, let's say AMD, just pounding, right? Just pounding from this 97 price point, getting back above the 50-day moving average. Strong move for semis, but AMD's got this $116 price point to contend with. So again, got to be cautious with these, right? How this is playing out, right? You could pull an Intel where you kind of get this choppiness. But enough about that. Pound here pushing even higher. Some of these companies, these risk on mentality, right? Like the king of risk on Bitcoin. The same thing that S&P did. Gap above your dominant downtrend and go, right? So a little bit of sell off into last night that we were having, but where does Bitcoin lie? Does Bitcoin cross that 90 threshold? Does it get back above 93? That would be the ultimate like bullish momentum for Bitcoin out there. And subsequently we got stocks like Meta, right? Just gapping and going, ready to break out, trying to get back above 660 for Meta. Again, juggernaut of a company. Amazon, absolutely crazy evaluation, right? Coming down below the 50-day moving average and just getting bought back up, right? This thing could be an easy ride all the way back above the 50-day moving average, above the 120 price close of 2024. Again, all these companies are basically discounted 10-20%, and everyone's like scoffing at it, saying, hey, we're going to crash even more. It doesn't necessarily make sense, especially when you look at stuff like Tesla. If the cult investors are back, bears, you got something to watch out for. And you bulls have the weekend deep dive linked over here to watch as well, along with our most related video here. Join the Discord as well over here. Thank you all so much for watching, and I hope to see you in the next one.